think we're all trying to make sense of this market and whether it's getting toppy here or whether we have a lot more room to go. We had a conversation, at least by text, Joe did, with David Tepper earlier this week, and he seemed to be at least optimistic, as he would say, temporarily, though. Where are you?
I think, look, we've clearly got a lot of economic volatility ahead of us in the next 6 or 9 months. We're going to have some fantastic growth prints, and that's going to be really good for equities. And we're going to have some inflation prints, which are scary, and that's going to be bad for bonds. And I think the market is going to be trying to deal with those two competing pressures. I suspect what happens is equities are higher come the end of the year, but we're going to have, rather than a steady grind up that we got used to last year, we're going to have a lot of these air pockets that we've seen like the last couple of weeks, where it might be an air pocket to the downside or it might be an air pocket to the upside. I think you have to get used to 10% shifts in a week happening pretty regularly, to be honest.
But if I'm hearing you correctly, you think that still by the end of the year we are up. The question I was going to ask you is how much up?
Oh, I tend not to try to pick numbers to be up. I leave that to the bank strategists. But we have a lot of good economic news. We've clearly just put some more fuel onto the fire with 1.9 trillion. There's talk of the infrastructure. All of this stuff means it's pretty hard for equities in total not to be up. But I think you're going to have quite a lot of rotation. You're going to see not every name up as we start to try to work out, is this inflation news something that we can look through, which I actually think it is, or is it something that the Fed is going to act on? And that's going to start to affect some of these sort of, well, let's call them very long duration stocks, the stocks where the profits and earnings are some way out in the future.
Well, that's what I was going to ask you. In terms of inflation, do you think we're going to see it this year in a meaningful way? And you know, we heard from the ECB yesterday. You've also heard continually from Powell in terms of how much they are going to do something or not do something about this.
Yep. I mean, look, I'm sure we're going to have some scary prints on inflation, particularly in the US. It's obviously more subdued in Europe. I'm sure we're going to see some 3% plus prints. We might even get a 4% print 1 or 2 months, and that's going to be spooky for markets. I think the Fed is going to try and look through it and say, look, this is temporary. It's caused by the reopening, and they're going to hope things will settle down. But that is going to be a real sort of push-pull between markets and the Fed in the second half of this year, I think.
Shepard Smith here. Thanks for watching CNBC on YouTube.